like real estate agent, they don't have any, they don't have any implication. They're not buying or anything. They just want a contract. So they can tell the seller anything.
Anything
They
they
can tell
want.
the seller you could sell your house for $1 million
No.
and just sign the contract. And a month later, they say, well, you know what? It's not selling. We should drop the price. Nah, nah, nah. That's the way they learn. So
Mhm.
most of them, this is exactly how they work. Some of them are better than this and they tell in advance, but most of them, they just want a contract. So they just tell anything they want to the seller, anything that the seller wants to hear, actually, and just to get a contract. So, I mean, the seller's like, okay, I want to sell my house for $1 million, even if it's a shit box.
Yeah.
So, and it's not happening, and they wonder why. Well, that's the reason, because they're way too expensive, and they
Eh,
they need they need a few reality check, not just
right.
one, but a few.
Hello, and welcome back to the Very Real Estate Effect podcast, a show dedicated to real estate investing right here in Quebec. And today I am very pleased and honored to have the biggest wholesaler in Montreal, Mr. Olivier Lepage. Hi, man. Welcome to the show.
Hello, hello. How are you?
I'm doing good. We have quite a few things to discuss.
Yes, there's always stuff to discuss.
Yeah. So before we get into it, I just want to remind everyone, thank you for sharing this episode with a friend who you feel could benefit from this conversation. Leave us a review, like, share, and send us some feedback. As I said last week, I'm in the process of organizing all my episodes from now till Christmas. If there's people you want to hear about and topics you want to learn from, let me know, send me a little note, and I'll do my best to find someone about that. So here you go. So for those who don't know Olivier, he's been on the show twice already. And I really like having him on because as a wholesaler, he's got a really good pulse of the market. Olivier last week celebrated his 350th transaction.
Yep. Actually, it might not be last week. It's been a few weeks.
Oh,
It's just that, like, honestly, like, I was at the real estate investment club, and I wanted to have something to say. So I was like, well, you know what? This summer I just did my 350th. Let's just plug that
yeah.
just to
It,
have
it,
something to say.
it's something that everyone can understand because it's a number of transaction and it's like, whoa, that's quite a bit. This guy must be good.
Well, I hope so. I mean, I've learned from a lot of mistakes, so hopefully I'm better now than I was.
Mm-hmm. So you have always been doing some wholesaling in Montreal. Your website is
My website for people that want to sell their house is I Buy Houses Montreal. And for people who want to invest with us, it's called Montreal HM. So montrealhm.com. So off market, but in French, all marché.
hors marché. Okay, so you have two websites depending on the audience you're talking to. That's a really good positioning. Now, the market is drastically different than it was a year ago or even 2 years ago. And when we saw each other last week, like my first question to you was, have you seen prices decrease? Like, what are you seeing right now?
Yeah, this is a great question. And actually, a lot of people are surprised by it. I was expecting it. I was expecting it. It's just the only thing is you have no idea when it's going to come. And, real estate turns slowly. Well, normally this time I think it went really fast, but I've seen price decrease. Of course, I can tell you that the same house in 2022 compared to 2023, my offer is now $100,000 less than it was in 2022.
Wow.
So that's major. And the difference is because the same house, first, I think they drop between 5 and 10%, and the holding is much longer. That's the difference now between when during COVID, obviously it was ridiculously going fast, but
Mhm.
now it's sitting on the market and it's going and it's selling at a normal pace, I could say, between, I don't know, 45, 60 days. So I have to take account that my holding cost is going to be a little bit higher
Yeah.
because I have to hold on to the property like 4 to 6 months instead of 2 months.
Mhm.
So expenses are a little higher, so my offer needs to be a little lower.
Because also the expected sales price for you is also lower. So for you
Yes.
to more or less keep the same margin, you need to buy it substantially lower. So when you say it's 100K less, what kind of average price are we looking at? Is it 100K on 300 or on 600?
For about 400 to 500.
Okay. So let's say a $500,000 house, you'd buy it for 400, and now you're trying to buy it for 300.
I was trying to buy it for like 430, 425. I had a tight margin because I know it was going fast in
Mhm.
2022. And now since it's a bit slower, I would probably be around 325, 350, something like this.
Wow.
So an
Okay.
average house in Montreal is about 500, 600.
Mhm. Okay. So then the prices have decreased a little bit, but you said the most concerning part is that now holding period is a lot longer. So for you, it has a big impact because as you say, like you need to pay more to sell it. So it costs you more. What about sellers? Have you noticed changes in terms of what is the average profile of the people who are selling their house to you?
Well, the average profile of the people that we have an accepted offer on is pretty much about the same. So the people calling us are different, and I see a lot of people that have been sitting on the market for a few months calling us, and now they want to sell, and they're not used to it, and most of them are asking way too much. Like, but it's okay. I mean, a lot of people that don't know real estate and don't know the cycle, they don't know that prices dropped.
Mhm.
So they're calling us, they want way too much, and they wonder why they're sitting on the market for that long. And they're like, well, my agent's not doing anything. And first thing first, I just tell them, like, hey, your price is way too high.
Yeah.
So lower your price, then I can make you an offer, but it's going to be even lower than that.
Yeah.
So that's what I see. So it's hard for them to accept an offer that's going to be, two times lower than what they have in mind. So a lot of people sitting on the market are calling us. That's what I see right now. So it's telling me that, people are going to be sitting on the market for much and much longer as months go by or a year go by. And I think it's going to last for at least 2 to 3 years.
Yeah.
If I look at the market back in the days, 05, 06, it went crazy ballistic, just like it did 2 years ago, 20%, 30% a year. And then it went flat for a few years until like 10, 12, and then it went down a little bit.
Mhm.
I remember 2012. I remember a contractor, they were giving away like appliances, they were giving away air conditioning just so
EVs.
they didn't
Yeah.
drop the price.
Yeah.
They
Yeah. Yeah.
kept holding on to their price, but they were giving away stuff
Yeah.
so people could buy it. And it was sitting on the market for like 6 months to a year, and it was hard. I remember I was trying to wholesale back in that time,
Mhm.
and it was so hard. I was barely able to do that, and it's hard to make money in real estate in that time. But it's a cycle. It's going to
Mhm.
come back, just like it did a few years ago. So it's the same thing. So expect at least that there are going to be some sort of correction for 2 to 3 years, and then it's going to be flat for I don't know, few years still. It's hard to tell exactly the amount of
Yeah.
time, but it's going to be a few years, and then it's going to come back in, I don't know, 10, 12 years. It's going to go up again, just like it always did.
Yeah.
So
And now you mentioned something I want to go back to. You said like now there's people who have their house listed on the market with an agent. It's not selling and they're calling me. And obviously you have to give them a reality check that for me to buy
yep.
this quickly, I'm going to drop 150,000 off the price. Now, to those who you say that, what is actually the ratio of people that actually agree to it? Because I feel like, as you said, a lot of people have been anchored by a broker and to say your house is worth 500,000. Well, you say that, but it's been on the market for 6 months and no one's buying it, so it's not really worth 500,000. Now, how many people call you and actually agree to drop their price?
Maybe 1 out of 50 or 1 out of 100.
Okay,
Yeah,
yeah,
it's not that much because, well, first thing first, uh, like real estate agent, they don't have any. they don't have any implication. They're not buying or anything. They just want a contract. So they can tell the seller anything.
Anything they
They can
want.
you could sell your house for $1 million
No.
and just sign the contract. And a month later, they say, well, you know what? It's not selling. We should drop the price. Nah, nah, nah. That's the way they learn. So most of them, this is exactly how they work. Some of them are better than this and they tell in advance, but most of them, they just want a contract. So they just tell anything they want to the seller, anything that the seller wants to hear, actually, and just to get a contract. So I mean, the seller's like, okay, I want to sell my house for $1 million, even if it's a shit box.
Yeah.
So, and it's not happening, and they wonder why. Well, that's the reason, because they're way too expensive, and they need a few reality check, not just one, but a few.
And sometimes that reality check takes a much longer period than we expect, because as you said, like, okay, you're listed for 500, you'd maybe consider 450, but it's really worth 375. Oh, no, 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 not possible. It might take 3 months for them to be like, okay, now we're in a bind. Would we accept 375?
Well, absolutely. And the thing is, in their head, they've been told that it's worth 500. So if I tell them that I'm gonna give them 375, in their head they'll lost 125.
No.
So it's like, oh my God, I lost 125, but it didn't lose anything.
No.
Because they didn't sell yet. But thing is it's not value 500, so nobody's gonna offer 500 anymore. So, but in their head, they're like, oh, I'm gonna get 125,000 less, so it's not worth it. I'm gonna wait.
Yeah.
I've seen so many different situation, and I had one yesterday. The lady is sick, she's going to the hospital, and then her parents is taking over, and they just texted me. It's like, hey, I want to, we have a house for sale and everything. And then the agent texts me, he's like, yeah, it's on the market at 499 and everything. And I was looking at the comp, exactly like we're saying, it's worth maybe 420, 430. And they want to sell it for 500 because she bought it last year at 480. I tell her, like, hey, 480 was like already way too much.
Yeah.
And now it's dropped, and now I gotta offer you way less.
She overpaid at the peak of the market, and now she's expecting to still get that price because she doesn't want to take the loss.
She's expecting more than that.
Yeah.
She wants to sell it more to cover the commission.
Yeah.
But it's not gonna happen, unfortunately, and that's what I told her. And it's like it's it's unfortunate because you're in a delicate situation and you need to sell. And try it on the market, but I know you're going to call me back in 2 to 3 months.
No.
And you're going to tell me like, hey, I want to sell now. And I always tell people, like, take account your holding costs. First thing first, your holding cost, like how much is going to cost you per month to keep that empty house. It's super expensive. And second, it's the opportunity cost, like the money that is sitting there and it's not working for you. Gaining money because you put it in the, I don't know, stock market or in bonds or anything. It's not taking money. It's not making money. So, I mean, you have to take account that, let's say, for the exercise, she doesn't have any mortgage on it. So that 400, it's not working for her at, let's say, 5 to 6% because she has bonds. But she's losing money because she's paying every month. So the difference is not, it's not only the 400 minus what I'm offering, which might be 350, but it's also the fact that that 400 is not making money also. So it's different between those two is often way more than people think.
Now, you as a wholesaler, you wholesale, you often sell to people who are going to flip the house, maybe to actually owner occupants and so on. Now, do you still see as many house flippers as before? Like, how has your clientele, your average buyer, how has it changed in the last year?
Great question. What I see right now is I see less buyer, like the retail buyer and the little flipper, they're really scared. So what I see right now is guys, and I'm saying guys, guys or girls.
Guys or girls.
But I see investor that have cash in hands. They're going ballistic. They're buying everything. They're buying everything. They're at every visit. I'm gonna buy this. They're buying like 2 to 3 houses a month. They're flipping it like crazy. So that's what I see right now. Like people that have liquid cash in their hand, they're buying everything.
Okay, so that's people coming to you and buying buying a $400,000 house for 275, and
Yep.
they do a bit of reno, put some lipstick on it, and put it back on the market.
It's worth 400. They're selling it for 375, and they're doing another one, another one, another one. And
Mhm.
that's what I see right now. So a lot of them that have been following me for a bit, now they're buying like double what they've been buying last year or the year before.
Okay. And so you still have buyers that are like that are still very liquid and able
Yeah.
to do multiple transactions. And as you said, the little flippers, they must be scared shitless.
Yeah, because any flipper that they're gonna have like a private money or a hard money, it's expensive. Every
Yeah.
month it's super expensive, even though it's I could say less expensive than it was last year because if you go into the bank at 7, 8, 9%, and compared to taking private money or hard money at 12, 13, the difference is big. So
Yeah.
I think it's less expensive, but still, I mean, every month it's 1%. So if you borrow 400, it's 4,000 a month plus
Yeah.
tax plus insurance.
Mhm.
So it's about 550, 5,500, I mean, per month. So, and it's
Just in
gonna last
holding.
4 to 6 months. So
Yeah.
you don't have any choice but to have liquid cash,
Yeah.
in hand just for the holding costs or to buy the whole house cash.
Yeah. And now for those who let's say have a little bit of cash right now, someone's got 50,000, they want to do something in real estate. What do you see as opportunity?
Well, I think for $50,000, I think the best way would be to do partnership because I don't think it's enough to buy a house right now.
No.
Because I think you should at least have 100,000 just to be safe because we don't know what's going to happen. I mean, you could have a house sitting on the market for 3 months, 4 months, and it's normal. I
Yeah.
mean, it's not that the house is expensive. It's just that's what it is right now. So
Mhm.
you better have, a little cushion. So I think 100,000 is minimum. So if you only have 50, it's fine. Just partnership. You can partnership with me or anybody else. It doesn't matter as long as you get along with your partner and you have someone that knows what he's doing.
Yeah. Yeah. And
And
then
actually, that's what I do myself too. I have a lot of partner right now that I use, and it's not that they have 50,000. It's just it's less risk when you split between two-person or more.
mhm.
So that's what I do right now a lot.
And it's like in every partnership, like everybody around the table must bring something
Yep.
unique that they have, and you have a big strength in that because you have a huge deal flow and you have a great network of lenders. So it's very clear what your contribution is. Now I just wanted to go back to some of those the little house flippers again. Someone who still wants to do a deal and a flip. Are there areas of the greater Montreal that you see more activity in and more demand from
Absolutely.
retail buyers, like the end user, the family who's going to buy it to live there for 10 years?
Absolutely. I think the area where it's like the poor area, I would say, or the area that are a little bit more in transition. To name a few, let's say the east part of Montreal,
Mm-hmm.
it's a little bit harder to sell, or obviously anything outside the greater Montreal is probably gonna
Is
take
booming.
much longer because houses are super
Yeah.
people think that houses are super expensive, but when you're an hour away from the city, it's not worth 400 or 500 when you can have a house at that price, like right here on the South Shore or the North Shore.
Mm-hmm.
So I think best place would be the nice area. So nice city, nice area, or places where houses are not too expensive, like places like Valleyfield, De Montagne,
Mm-hmm.
Chateauguay, or like places like this where it's like tertiary market, a little bit outside the city, but still close enough so you can drive to the city and where there's a lot of job, obviously. Anywhere where you see construction or you see a new company, warehouse and stuff like this, where there's job, there's going to be a lot of people.
Yeah. Yeah. No,
Let's
that
say,
makes sense.
well, you've seen the new battery factory that might, come up to McMasterville. That's a big thing. So prices, houses are going to continue to sell
Yeah.
around that area.
Mm-hmm. Actually, it's interesting. Thank you for bringing this up because For those who don't follow the news, I think it was last week or 2 weeks ago, it was announced by my champion favorite, Luc Poirier, who sold the land to Northvolt. They're going to develop a big
Magic hand, Luke. I don't know.
this
I think he
guy.
put his hand on
I
something.
I know, and it's funny because maybe a week or two before it was announced, like he made a post on social media saying like, "Oh, I think I'm gonna buy a jet," and stuff like that. And it's like obviously he must have known that he had this gigantic paycheck that was essentially coming in. Good for him. He's one of my heroes. Where was I going? Yes. So last week, the city of Saint-Basile-le-Grand organized an open house organized by Northvolt, and my wife went, and she said they did such a good job at diffusing people. It was essentially like a meeting with just small groups, and they would answer all the questions, and there was like different booths with like, okay, what kind of jobs are you interested in? A job, go over there. We want to answer all your questions with regards to, traffic concerns and the noise and all this for the neighborhood. And when she came back, she was like, this is an amazing project. It's a Swedish company, and yeah, when you bring thousands of jobs, obviously property prices is going to go up. Obviously, there's going to be more demand for housing, infrastructure, and all that. So, in your opinion, like, do you have any properties for sale in that area that people should throw themselves on?
Oh, not right now, but I'm definitely gonna do marketing over there for sure.
Yeah, because yeah, a couple thousand jobs is the biggest industrial project in Quebec to date.
Oh, it's huge. It's huge, huge thing. So, and I think it's amazing for Quebec. I mean, Swedish factory as big as this, and I think the future is in battery. Obviously, I don't have to, to tell you. So I think it's going to be huge. So it's worth it. So
Yeah.
something like this, it's worth it. So any cities around that area, Belleuil, McMasterville, Saint-Basile, Saint-Bruno, obviously, but it's always been a good market. Saint-Bruno, it
Yeah.
has its own particular market.
And prices are high. San Bruno, Boucherville, and all that, like prices are substantially high.
Well, that's one of the city, honestly, like any market, Boucherville, Saint-Bruno, it's just like the Saint-Lambert or like little area where it's a super nice city. Like these three, it's always been a good market. It's
Yeah.
always been a seller's market, even in the worst buyer's market, Saint-Bruno, Boucherville.
Yeah.
It's always been a seller's market over there.
Very interesting. Okay, so as areas to focus, I like how you said like, kind of tertiary market, Châteauguay, Two Mountains, and places like this. And the way I think about it is always like, where would families would want to settle?
Yeah.
And those cities are actually very good for that. So
Yeah, and it's just to name a few, I could say Saint-Luc would be a nice place, Saint-Amable, which one a little bit outside of Repentigny, I can't remember, Lachenay, I think it is,
I'm not sure.
or Blainville, but Blainville is still expensive because of Mirabel, maybe a little bit,
Mhm.
just a little bit outside the city
Yeah.
because where places where houses are still like 200 to 300. Those houses are like hotcake,
Bah
crazy. They're
oui.
going so fast.
Yeah.
I mean, we're making more money on a house at 200 than on a house at 700.
Mhm. Oh, I'm not surprised. It's
Yeah.
completely counterintuitive, but I'm not surprised. Do you have anything near Saint Jérôme?
Saint Jerome, I'd have to check. I don't think I have anything right now, but it
Mhm.
does come up like pretty often.
Okay. I have more of an interest in that city because we're developing over there. But so I always ask, oh, what about Saint Jérôme? Okay. So as you said, the current situation has changed from a year or two ago. The economic environment. You
Mhm.
said like, oh, we can expect it to be like that for a couple of years now. No one
Yep.
has a crystal ball. You're not the Bank of Canada, and I just want to put
Nope.
that as a disclaimer to
Absolutely.
everyone. But like, where do you see this going over the next 2, 3 years?
That's a good question. And the only thing I could say is if I look at the past, what has happened before, and the different cycle, I think the cycle are getting a little bit shorter. I mean, it's not really different from stock market. It's just it turns much slower than the stock market, but
Yeah.
I think it so it's going to be slower for the next few years, and it's just a normal correction. Price have been, I think, a little too high for what it's worth. So now they're trying to correct it and calm down. But so what I saw happen before is just that government are trying to, slow down the inflation. So they're raising up interest rate just to slow down the inflation, but they don't want to destroy the economy. They might do it, but that's not the intention. But as soon as, they're going to see sign of like people stop buying and the economy is not going to be good, they're going to try to, incentivize to buy. So they're going to probably invent programs and stuff like this. And I saw a few programs in multifamily because in multifamily has been taking a really huge hit right now. And it's so hard to get financing that they're trying to incentivize, anything possible just so people are still doing construction and people are still buying. It's just that they want to avoid a renovation, but they still want people to buy.
Yeah.
So what I see is I think it's a really good time to get into position for the next 10, 20 years. So think long term right now. Don't think short term because short term is going to be hard right now, unless you have a really good deal. So if you have a good deal, there's always good deal at any time. But if you think more long term, let's say you want to have something that you're going to rent out and keep for 10 years, it's going to double in 10 years, 10 to 15, let's say. But it's going to double. So think more long term right now. So trying to find a nice opportunity, 100, 150 less than the market value, maybe just 50 if you want to live in there. Or if you're a contractor because you don't have the same expense as a normal flipper. But I think there's always good deal. Just think more long term and trying to get your hands on deal right now because it's not time to buy a good deal when the market's going up. It's too late. You need to buy right now and in the next 5 years so you can position yourself for the next 10, 15 years.
I'm really happy and reassured that you say that because I always think like real estate is a marathon. We can't think about it now and like, oh, we've taken a hit and this and that. Since a year, it's hard. Yeah, but think 20 years from now, how happy are you going to be that you still have your properties and how much will have they gained in value? So, I couldn't agree more. It's the cycle. We will get through it. It will come back up. And I hate to say, but the gap between those who own and those who don't is only growing just because over the last couple of years, so much equity has been built. And so it's harder and harder for people to enter the market. So those who have been in the market enjoyed a huge appreciation and they should be patient enough to let it continue. Just ride the wave.
And that's a good point that you bring. And I want to say something about that because I'm plugged into the US and what's going on over there because normally they're a little bit before us. Anything happening is there a little bit before us. So I look at what's happening over there. And I was talking to a guy who was showing statistic and he was saying that the US is about, don't quote me on this, but it's about 40% renters compared to owners right now. And he was saying that one of his partner, who's like a billionaire from the UK, is investing a lot in the US because over there, it's more than 60% renters. So, and he was predicting that the US is going to come more and more of a renting nation, and it's probably going to come up to 60%. So that means that 20% gap of houses are going to be bought by either big company, big REIT and stuff like this just to rent out. So that might happen also here. But we're going to be late to the US, so that's a good thing. But I think it's going to be more and more of renters than buyers. So if you position yourself well and buy right now and have the ability also to keep those houses because some of them are going to be cash flow negative at first. But if you're able to keep them for 10 years, you're going to double your money in 10 years for sure.
Yeah, I love it. All right, Olivier, we're getting towards the end here. If people want to reach out to you, so look at some of the properties that you have under contract and that you're selling, or if they have a house, or if they have a house for sale, what is the best way to get in touch?
They have a house for sale. I buy houses Montreal, the original, since 2008. If you want to invest or if you want to buy, go to montrealhm.com. And if you want to reach me, I'm pretty active in social media. So you can go on Facebook, Olivier Lepage, Instagram, TikTok. I'm pretty much on all those platforms.
There you go. Well, Olivier, thank you for your pulse on the market today. Very appreciated. And for all those who are listening, again, share this episode with a friend who could benefit from this conversation. And Olivier will come back in the future because it's always enjoyable. So thanks a lot,
Awesome.
man. Very appreciate it. And to everyone listening, keep researching your market, keep making offers. Thank you very much. I'll talk to you next week. Bye-bye.